Hi, it's Ian from BeAWinningTrader.com, and I just want to point out the importance of being able to understand the basics of price action. And this is a daily chart. In this instance, it is a daily chart of the US dollar versus the Japanese yen. And each bar here represents, as I've already said, 1 day. So, to analyze price action, and I'm talking about the very basics of price action, you need to be able to understand the makeup of a bar and what it means correctly. Okay, so what we're talking about, bullish and bearish bars, and each bar depends on where the close is, which is here, in relation to the low or to the high. And this particular bar here, which is the bar that I want to point out, in fact I will just put in an arrow to point this bar here. This is the bar that I want to talk about in particular and why it's so important. This is a bar that is a bearish bar, and the reason it's a bearish bar because the close here is closer to the low than it is to the high. Now what that means from a price action perspective, analysing one single bar, is that there's a greater probability that that low will be broken before that high. That is what that means. But what it also means is that if that low, in this instance, because it's a bearish bar, means the low should be broken first. If it is not broken first and the high is broken, it's like flipping a coin in its head, and it means that it turns, in this instance, a bearish situation into a bullish situation. So let's look what happened here. Now, not only is this a bearish bar, but it's what we call a bearish outside vertical bar, and let me explain why that is. It is because it's got a higher high. This high here is a higher high than the bar immediately next to it, and this low is a lower low than the bar immediately next to it also. So it's got a higher high and it's got a lower low. So therefore it is an outside vertical bar, the most powerful single vertical bar set up when analysing price action. So you can see for a number of days, because each bar here represents 1 day, we actually traded 1, 2, 3, 4, 5, 6, 7. There was about 10 days here where this market traded inside this bearish bar. But then all of a sudden, here we go, and the market broke up through the high of that bearish bar and not the low. So again, as I've said, breaking the high without the low here because it was a bearish bar and the probabilities were that it was going to break the low, flips the coin and turns a bearish situation into a bullish situation. And look what it did. That market moved from there, which was 146.05, and it moved up almost to, well, it moved up to 150. It moved up 400 pips. So there's the power of knowing then. So therefore, if you're looking to take trades in a smaller time frame once that had happened, you certainly would be looking to take buy signals because you now know that the bearish scenario has changed. It has broken the high of the outside vertical bar on a daily time frame when it should have broken the low first. So therefore, it's so powerful. Now, if I just conclude with this video with one more chart, again on a daily time frame. In this instance, it's the Swiss franc versus the Japanese yen, and I'm recording this video on the 21st of October, and the same scenario is here, but the only difference is it has not broken the high or the low. Again, you can see this is an outside vertical bar to the downside. It means that the greater probability is to break this low without the high, and just like the dollar yen, if it doesn't do that, if it does the complete opposite, and remember, the probabilities are for it not to do that. If it does the complete opposite, sorry, I've turned on the wrong chart. If it does the complete opposite, then it is a complete different scenario. But again, we're now trading this last probably 2 trading weeks, a bit longer here, inside this bearish bar. So therefore, from my perspective, from a trader's perspective, I would be more interested to try and see, can I get sell signals on this intraday time frames? That could be a 60-minute chart in this instance or a 240-minute chart. What's a sell signal? It means that if we get lower vertical, if we get lower highs, and with that there, and what they call lower vertical bar highs, in other words, that this high here is a lower high than this high. So therefore, you can see today is Friday the 21st. We've got probably again an outside vertical daily bar within an outside vertical daily bar, and it's bounced off the lows here, and it's up round about a mean, the mean, which is a 50-50 bar. But again, bear in mind the Swiss franc Japanese yen On the 21st of October 2022, we are trading inside a bearish outside vertical daily bar where the probabilities are much greater that it will take out the low of 143.50 in comparison to taking out the high at 151.44. Quite a range, I know, but remember, this is what our aims are. So that's just being able to understand and have the knowledge of knowing how to analyze a single vertical bar on a price action perspective correctly. I hope you enjoy. Thank you.